Hello everyone, today is November 26th and this is our session number 12 of the Wyckoff Trading Practicum course. We have 4 sessions left, so I kind of like how the course has evolved. I mean, obviously we're paying a lot of attention lately to the bias game, rightfully so. I mean, it all starts there with the bias. How do we interpret it? How do we get to that point of being comfortable? I think as a group, we've made a really, really great big um, progress because, once I started asking you guys, to be accountable to what you have for your bias game, and all of you are sending me you know, your percent or, the number. Um, so I see that you guys serious about this, so it's great. And then obviously that required me to be a little bit more detailed and precise in the way how to explain this. So I still feel like we're still residing in that space, and that's fine for now. That's totally fine. That's what the practicum is about, to practice. We are practicing after all. In the announcements, and this is very important for this class because you guys are more advanced than WTC members, students. I'm going to talk about the long-term campaigns in December. And this is the subject that we obviously discuss here in this class a lot, um, in the context of some kind of exercise or some kind of trade. And so we're seeing a lot of price cycle type of charts that I give you. So the key is going to be there to understand kind of like deeply how all of our trading is rooted into the price cycle, into that long-term campaign, and what are the best places for us to actually swing around it, right? Swing trade around it. I also will be talking about sustainability of the trends. I think this is the subject that is extremely important. This subject also leads to, again, the selection on the swing trade, where we're taking it in which part of the structure and so on and so forth. So there are quite a few topics there that are more advanced. So therefore, for you, this is a highly appropriate material. And registration is open for the part 2 of the WTC, the practicum, for next semester. I'm expecting that some of you are going to continue, just as some of you have continued from the previous semester. We have a lot of alumni, in this class from different cycles. And the reason why is because, well, once a week, you could devote this time to focus just on practice. Especially if your life is kind of hectic and you want to have that structure every Tuesday, this is the class, or like you're watching that video each Tuesday or maybe over the weekend, and you have some kind of structure to study and to acquire more skill. Even that is helpful if you do this just once a week. Because if you don't do even that, and you just listening to TV, reading articles, that's definitely not enough. We want to practice. We want to take the chart. We want to look at the chart, analyze, and then post-analyze our mistakes. Unfortunately, that's a long process, but with that comes the quality of the analysis. So what are we going to do today? Obviously, a bias game, as I mentioned, anatomy of the trade, some Q&As, market update, and then exercise number 8, I believe, and then we are on bias, not on the selection. As usual, everything that we've talked in these classes is for educational purposes only. All right, so here is the bias game. Majority of you actually, I would say, like in the 90s, I think we are. Maybe we had like one, maybe two. I don't recall exactly, but this one was somewhat easy for you guys. as a group. I don't know exactly what it is, but let's just go through this, I guess. As the last time, we started going through the structure of the analysis. What is it that we want to do initially, right? So we don't want to be caught up in the initial self-talk that we have, or this is accumulation or a distribution. But at the same time, as I'm reading your email, some of you are saying like, I actually like the general look first, and for me to kind of like gauge as to what do I get in response from my subconscious. I think that's totally fine. Somebody was commenting that this is a flag, a bearish flag, so I see that right away. And I think that's really good. And then you apply your Wyckoff tape reading over this and you confirm it or not. Having said this, don't make the final judgment yet and try to still go through the Wyckoff story from left to right. That will bring the whole logic into the point of where we are on the last bar. I really like the analysis, and I thought I needed to show this maybe next time, from Eric. Eric is showing kind of like different phases in different colors. So for instance, this is a phase, this is a phase, and this is a phase, and we kind of see how, what he means by that, right? So for instance, something like this. So uptrend, consolidation, uptrend, then downswing, and then the last one, attempt to go up, right? So an attempt to go up. And then you start creating this story from, one phase to another, from one period to another. All right, well, uptrend. What do we see in this uptrend? Volume is expanding, price is expanding, looks very bullish. That's the story. We don't have to go into a lot of details here because we know what has happened. We see, characteristics. We make a note of those characteristics because we will be comparing, this rally potentially with the rallies that are going to come later. Let's look at the reaccumulation, how it starts. There is no volume whatsoever, no selling. That's suggestive even in phase A and B of a reaccumulation. And then once it go higher and then higher again, you kind of see how more of the in availability of the supply moves the price up. It's not that demand is very active, although in some instances it is, but supply comes in right away. So there is this demand-supply type of relationship until supply is finally being exhausted in phase C. And then after that, the new regime starts, the new section, the new environment. And we're seeing that demand is still active. Into this first move up, supply comes, produces somewhat of the aggressive reaction, and we kind of might be thinking, what is this? Is this a change of character, or is this just a preliminary supply? So the price overcomes resistance on multiple closes. So it's suggestive still of bullishness that we see. The only thing that we're seeing is now a little bit of the divergence between the effort, which is diminishing relative to the previous rally, and the result, where we have the diminishing thrust, specifically up thrust. This is a momentum tool that Wyckoff used himself on charts. significant high, how much progress do we have from one high to another? And there is much less of a progress than, let's say, between high number 1 and 2. So that's how Wyckoff would be looking at this. Of course, don't forget log scale here. But you can think in terms of the percent. You don't have to think in terms of the price. Percent actually makes also a lot of sense. Even sometimes even, more. All right, so what happens next? So somewhere here we see that maybe a precondition for a reaction. We said the effort diminishes and we don't have a lot of result to the upside. In itself, this is not necessarily a signal. It acts as a precondition to the signal. So what would be the signal itself? I think any type of sign of weakness action would act as a signal itself, and then a continuation of this downtrend will act as a confirmation. So we probably would be thinking here about this trend, maybe even this one right here. So there is a couple of places where the trend fails. And that happens after this precondition, right? So this failure has a little bit more relevance to us than, let's say, maybe some previous attempts. Once we go below into the sign of weakness right here, then we definitely seeing this as a signal. This is the signal that this uptrend is done. At the minimum, we're going to have a trading range, and at the maximum, we could have just a hypodermic action to the downside, which it kind of looks a little bit hypodermic. Yeah, speculation on the way up, speculation, urgency to sell on the way down. As the price goes down, what we want to see is we want to observe different fragments of the reaction. So obviously this first reaction that is going below the levels of the preliminary supply, let's say, and later we could label this more as a buying climax, by the way, with an upthrust of the distribution right here. And then this would be a major sign of weakness and a major LPSY. Or we could say that, we're looking at this whole formation, big formation. And then we're thinking preliminary supply. Buying climax. Automatic reaction, secondary test. Then secondary tests as minor sign of weaknesses in phase B. And then what's interesting with this picture is that every time we're trying to go up, this rally right here, this rally right here, we're not reaching this high. So if we're thinking that this is a distribution, then we're thinking about a TP formation. TP formation really quickly. Let's go through the elements of the TP formation just to repeat them. Speculation on the way up. Then urgent selling by CO in phases A and early B. And then inactivity by the CO later. which brings us to the area where the volume generally will go down. Supply and demand will go down. The rallies will never touch the resistance that was created by the buying climax. So buying climax won't be tested. Also, majority of the volume signature is going to be in that phase A, phase B. The resolution of the apex formation, which basically forms in phase B to C, is going to be increase in volume signature and also breakdown. This will be institutional capitulation, and those are usually going to be institutional trend followers. This is where the trend is going to fail in the major way. So these are the attributes of the TP formation, how it starts, how it starts to develop. Again, there is a lot of urgency by institutions to sell on the way down. And we kind of could see this in this bar, a lot of it. Although there is a lot of buying in this bar, but somebody is actively selling even at this lower prices. So it's very interesting how supply has increased so much. Without this big bar will not be just complete demand or complete supply. This type of bar will always contain both, and in a lot of quantities. So we could assume that there is a lot of supply here. So even at these lower prices, they are selling after the gap. So they want to get rid of this really quick. So there is some urgency to do that. Obviously, somebody is, buying into the oversold condition just for this rally. And then again, consistent selling, selling again, selling into the climactic actions as well. So there is quite a lot of selling that is happening, and it's increasing on the way down. And it produces a meaningful reaction. All of our gains that we have had before, they are all gone. So this is a significant move to the downside. On the percentage basis, we're looking at 50% decline or so. So we are in the downtrend at this point of time. If the bias right now is down, then this is how we're approaching this area right here. So what is it that we're looking for? Well, we're looking at probably a slow confirmation, something like this. We're seeing how there is a very clearly defined upthrust, and it came on an increased volume signature, so that tells us that there is an increase of supply here. And what happens after that? The price actually goes down, goes through the whole trading range, and then commits to the downside in a meaningful way on 1, 2, 3, 4 progressive closes to the downside. And then the price tries to rally, and it rallies exactly into the area of the resistance that acted before the sloping support. So this is where we would find LPSY, and any type of breakdown after that we would welcome, too short, because there is a little bit of the momentum to the upside. You want to wait for the test, and then your entry is just basically through 50. Anything that fails on the last attempt to retest, so a bar just a close below, or a break to the downside bar, or you might be thinking, a breakout of this line right here, or even a break of this line right here. All of this becomes a zone where you could initiate your positions to the downside. And at this point, you're probably thinking, well, how do you think about what supply is available, or what could happen after this? Like, what would be the character with which the price is going to move? Again, I refer to the story of the bias. We have that urgent selling here by the CO. We have some value selling into the highs by the value investors as well. And then after that, there is a bunch of selling into the strength, right? So for instance, here we have this selling, then here we have this selling, and then after this, probably on earnings, we have a gap. So there is some selling, 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 selling. So as we look at the attempts to go up, there is definitely some selling that is happening. So that does not allow the price to go up significantly, and it stops it at some points that were very important before. And the latest rally is extremely weak. If there is an increase in the effort, it doesn't really take us even above the gap that we have here. So looks weaker. Next rally looks weaker. And if we're going to fail again, tactics are just going to be to open as the price starts to commit to the downside, and probably to open fast. Why? Because again, this type of formation that we talk about, this TP formation that concludes with apex, suggests that some of the ITFs are still in the position. They did not leave this position, and that's why we have some, bullish looking higher lows, and sometimes local higher highs. So that confuses people, because on the technical basis, imagine all of the systems are given the signal that this is a breakout. So a lot of people are going into this position, especially somewhere here on a much more major breakout, and then this is where they meet institutional supply. So if there is still some of the institutions that are trapped in this position, once the price is going to start moving down, the price is going to accelerate. So let's just see if that happens. And the volume signature, specifically supply, has to increase because capitulation is going to happen. If this is not going to happen, if supply is not going to increase, but the price still goes down, then we will see more of the ease of movement, where the price, where they just sold everything, and then a smaller supply moves the price easily to the downside. One way or another, given up this position is probably going to be very fast for institutions, so we're still going to see some kind of momentum to the downside. Let's see what happens. Well, it's definitely some acceleration. I would say probably more to the end here, although the gap also is a big event, huge event. But, and see how the volume is actually not, so that ease of movement happens, right? So, so I think that second interpretation was correct. It's more about they have sold in this area right here. So under the weight of inactivity here, and we see how volatility condenses here, then it's just an ease of movement to the downside. This is what I think is happening with the market right now. We have just an ease of movement after all of the supply has been absorbed. And if some of the supply temporarily comes in on profit taking, it's quickly being absorbed, but we'll look into this. Okay, let's see what the Twitter said. Accumulation 52%. I think again, it's just a pattern, a structural pattern where we have higher highs, higher lows, and that diminished volatility because the volume signature goes like this. That's what confuses people. But you have to take into the context of where you are right now. What is the context? The context is the downtrend. So at this point, you're gonna, still think of the rallies as attempts to overcome that context. Today, also in preparation, for this session, I was going through some of the charts and I've seen a pattern like this. And it was, and then I realized it kind of looked the same. So what is that pattern? What might be the confusion here? Going into phase B, there is a lot of strength. So imagine if we're just like looking at the chart somewhere here, and let's say on this breakout, how are we commenting about the bias? We're probably thinking that, well, supply has diminished, there is some strength, we're gonna probably, break this high and go up from here. And maybe even a first initial target is gonna be somewhere here, which it tried to do. So initial trade here should be okay, but then an overall bias obviously would be identified incorrectly. So the key was, actually the key is a little bit later on. So then what happens next is very interesting. We have a higher low, which could be suggestive of what? This reaction we would be comparing to this reaction, and we would be thinking here, well, result is diminishing, right? And then how's selling behaving? Selling, selling, selling again. So it goes up, effort increases, result diminishes. And we would be thinking at that point still bullish. And here we kind of being caught up also in the character. There is more of the momentum to the downside on the previous reaction than on the current reaction. So we would be thinking that we're going to have a rally. So the key to this was this. We wanted to see if we could have a test first, because this is diminishing supply signature. We are expecting a rally, and we want the rally to have, kind of like ABC structure here. So ABC. But then after that, we want to see a continuation, meaning that a confirmation would be a bar acting as a significant bar and commitment above this reaction, most recent high. Then this would become a bullish pattern right here. But as the pattern fails, then it becomes extremely bearish. So just an observation that I was just going through the chart today. All right, next bias game. What do you guys think? Accumulation or a distribution? And I'm gonna confuse you here, so I want your answers. So think about this for maybe like 20 seconds and then let me know. All right, what do you guys think? All right, maybe one more. Interesting. Very interesting. Okay. Oh, only one answer came from you guys, and that this is an accumulation. Um, do you know that the contrarian opinion would be to go against this accumulation opinion, right? So that this is a distribution. All right, guys. Well, first of all, the answer is gonna come out on Twitter on Friday, so you can catch up with the solution to this game on Friday if you're unwilling to wait until Tuesday. As usual, I'm waiting for your homework emails on the bias. I want you to still now go through what we do exactly with the vertical chart, and that is we want to segment this and think about what is happening there. And all of the information about the price movement is here, right? We know what this chart is, so I would just almost insist, go column by column. I want you to get a feel for the PNF, how the price moves. And you will see in certain moments where momentum starts to develop, where momentum starts to fade, where supply comes in, and how supply influences the price, then where demand comes in, where demand starts to influence the price. There's going to be a question today about synchronicity. PNF shows a lot of those concepts like synchronicity, where there is a synchronicity to the upside, where there is synchronicity to the downside. And if you want to use the effort versus result concepts, look at the volume signature. That's probably my favorite view of the PNF. It's with the volume because the columns condense a lot of price action of vertical bars. So you have a concentration of price movement in one column, and then that produces a more meaningful volume signature. And then I also would like you to think about this question. What is going on with the volume signature, overall volume signature, from the beginning of the chart to the end of the chart? I mean, I'm definitely seeing that the price is, from the first column to the last column, the price has increased. I understand that. Then why is the volume signature decreasing? So I want the answer to that. All right, guys, that's going to be a fun one because we usually don't do the PNF, and we could definitely do this. And this is just another tool for us to understand how the price moves. All right, let's look at the markets. Let's look at the markets. We could see that, again, on all of the comments that I've been making, on Twitter. So if you want, my market commentary, which I will try to avoid not to do this week. Just want to get my mind off the market and just in general, just rest. But we are breaking a resistance line. And not only that, we're committing above it. And we're doing this on the lesser effort. So that's just an ease of movement that is happening. And all we have to observe is the areas where supply comes in, and then it creates some kind of condition where there is a very much short-term volatility, and that supply is being actively observed, and quickly the price goes away from that area. So I don't think that the trade, and Dmitry is here, I was watching his trade on on Twitter. I don't think that the trade on volatility is actually a trade for now. If anything, when we look at volatility, let's say you look at volatility, what do we want to see in volatility? We want to see, actually, let me just do another idea. Okay. All right, yeah, it's okay. Let's do this. Look at the volatility. Yeah, I know that you exited because there was no reason to hold on to that after the initial break to the downside and the next bar, which was kind of like a test. So I thought that you might have. But look at how volatility shows the environment for us, right? Until we have something more significant, like this bar right here, this bar right here, this bar right here, we're probably not gonna see, a meaningful correction of like, like 7-10%. So that's not gonna happen. And this is just environment of the uptrend. When did this happen? Before I was just, thinking what would be that analog for us. And I thought that maybe I found something close. So you guys tell me what you think of this texture. To me, it just feels the same way, the way how the price moves. Okay, here it is. Okay. Oh, yeah, here it is. Just want you to see both. This is kind of like grinding up, goes up, has some kind of small supply, goes into a smaller trading range, goes up, has some kind of small reaction, but it's not like this reaction is very significant. And that's kind of like the course with which the price was going up in 1995. And I'm thinking that we are having something of a similar sort, where there is a lot of disbelief that the price will go up right now. Like everybody's talking about, yeah, it's bullish, 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 but it's just like, oh, maybe we're gonna have a reaction, and maybe we will. Maybe we will have something more like this, where we are having an upthrust, and then we're going into maybe another upthrust, another test, and then we have some kind of reaction. That reaction should not be as deep, but it can happen, it can come. But at the same time, think that we could have this type of action, just going up and up and up. And notice where it started. It started at the end of the last quarter in December. We had the same thing happening last year, December low. Here we are starting a little bit earlier in October. But we still could think about the analog. The price here is making the new high around February or March, somewhere here. So this is 2 months about. So this is exactly where we are making a new high. And it's around the new high that we are having some kind of hesitation, and then again a breakout out of that. Because think about what people were thinking here at this point of time when it's making the new high, right? they're thinking, Wyckoffins are thinking, sign of strength. What should follow? A backup action. Okay, well, a backing up action. So let's say that maybe this is the end of this sign of strength, not this one. So this whole move right here. A backing up action should develop, should go somewhere here, might have some kind of like duration behind it, and then it just does this. Nothing else. So, and it's all built on the sentiment that still the economy is not improving. Although nobody really is kind of like, if you look at the fundamentals of this economy, 70% consumer based, and if you look at the consumer indicators, unemployment is, as at the very, very low number right now, and we're still not seeing any upticks in unemployment. It's going down. So until that type of environment for consumers is going to be present, we're probably going to have that type of move where there are some worries on the government side, maybe on some on the corporate side with earnings, but the consumer is extremely strong. And that consumer is kind of like carrying us out of this structure. But slowly, with a lot of attempts to profit take, which lead to nowhere but small reactions. Something like that. And then we go into the spring with this type of action, into the new year first and then into a spring. So I'm thinking that, could we possibly have this type of character, that just travels like that? So that's just a very quick observation on the price itself, on the character with which it moves. So everything is still extremely bullish for the markets. Russell, as you guys have seen, started to outperform. I like this breakout. We've talked about it in WMD. My comment was that this horizontal structure right here is so different than what we've seen before, that this suggests some kind of outperformance, and then it happens right away out of the gate. And also acts as a confirmation that this bull rally is valid, and it's not a fake. Let's quickly look at oil. So oil update was that we are still long-term bullish since our call somewhere here, and short-term we want to see the price hold on to these levels around 58 and then start committing above 59. If this happens, then we quickly gonna go to 62 and meet some supply here, which is gonna be a major test. So and that would be in line with kind of like this rally in the markets as well, this laborious rally, but still with some bullish bias. Bitcoin bringing this up because now we kind of see the resolution of the call, after this big rally up. So our call was that some supply came in right here in the context of the downtrend. So at the resistance line. So this is most likely not a sign of strength. And somewhere here it's just been starting to be confirmed. Usually in this type of the scenarios, the first movement is going to be grinding down without a lot of volume signature, and then acceleration into the support with the break. It happened exactly that way. All right. Gold is a little bit tricky. And some news are coming out, I think. I don't know. Is there any news on gold? Yeah, look at this. Yeah, so pre-holiday maybe activity, but I don't think that gold has a definitive edge yet at this point of time. I think if the market is going to move up, there is probably going to be more of like smaller moves, the gold that we might observe after this initial huge momentum buy. So there might be more of the consolidating action, at least temporarily. So I'm not really trying to do any trading in gold at this point of time, and trying to find the spot where it's going to be much more clear what's going to happen. So I'm willing to maybe even miss some of the moves, even though I still have the long-term position in gold in general, but I'm not actively trading gold at this point. And what else? Okay, I think that's it. All right, so that's it for the market update. Let's go to some questions. From Chris, when I read a chart, when you read a chart, how much weight do you give to reading likely market participant moves, or just read what has happened then? Who could have provided this footprint of just raw price and volume? All right. Have you ever looked into the synchronization indicator as it moves in and out of phase with price? Okay, so kind of like two questions here. Let's answer the second question first. Synchronization. So synchronization between effort and the result. And we've talked about this. We did a couple of bias games where we tried to find that, synchronization between effort and the result. I thought that was very successful and you guys really liked it. So then we took this one step further, and in the November special, I've shown you guys, how to measure the ease of movement. So we would define the velocity of price movement as on a measure on a unit of effort. So for those of you who are interested in this, you could, you could purchase the November special. The secret sauce is there. We're going to develop this a little bit more, and we're going to add a result to that. So hopefully we're going to develop like this new indicator for us that we're going to use. And then the second question, what do we look at? Market participants. So what we call a Wyckoff story is a combination of observations and deductions. So under the observations, you're going to see the increased volume signature, and you're going to see specific events where the big interest is going to participate. And then our deductions about those places are going to be about their motives. If we are saying if effort did this and result did that, then the CO most likely did this. And then we are saying, could we find a confirmation of that? So, and then the simplest example of this would be, well, if we're seeing elements of accumulation through the trading range, where we're seeing elements of supply absorption, urgent demand, or non-urgent demand, and still the price starts building an uptrend, then that acts as a confirmation, and our deduction about the CO is that CO has accumulated a position and that the price will go up. So it's both. We are converting our observation of technical patterns into the deductions to what market participants are doing. All right, good questions. Let's look at the anatomy of the trade. So one of the comments that I've received, I think it was Sharon. I think Sharon said that, you know, the stock was picked up correctly. And I wanted to comment on that, by the way. I wanted to comment on that a little bit. Remember our first stock or the second stock? So it was the renewable stock, SunPower, right? So remember the structure where we picked up that stock around $6, and I'm just gonna try to draw it like from my memory. Right, something like this, and then we have this trading range, and somewhere here on this bar, we're picking this up. Okay, and now look at we're picking up trading view, right? So we're picking it up after an uptrend. We see stop in action. So we're kind of in the trading range. And then within this trading range, we are identifying this area. So this is a short-term oversold in the kind of like more or less, what is this, February to about, yeah, so maybe like some kind of a potential reaccumulation right here. Is there a difference, positional, structural difference, where these two stocks are being picked up? Even if both of them would fail, there is probably more probability, you know, for the trading desk, because it has stopped going up and was consolidating, and also it had some short-term oversold condition going from 280 to 180. That's a significant drop. Whereas here we are at the top and after the speculative run right here. So I just wanted to bring this to your attention. A question here from Arvind is this a feather? Right here. Yes. And I was hoping that you guys are going to see this, because, you know, during the week, I was actually thinking about opening a position in a trading desk. And, you know, it just kind of got away from me with some other positions that I thought that they were better. But my expectation was that after this absorption, vertical absorption of supply, we could see how supply is so low, and whatever supply is coming in, it's being absorbed, and the price gradually is being moved up. So that suggests that when demand's going to come, it's going to push the price quickly. And I was thinking about the position on Monday where I would be opening weekly options that would be closing on Friday, either of this week or next week. Why? Because if the momentum is going to be fast, then Monday, Tuesday, Wednesday probably going to have that momentum move, and that's exactly how it happened. So those weekly options would be a really good trade after a feather, after this type of the scenario. And I think that's where, you know, mistake last time as a class mistake was made, because we were in this pattern already. So we should have seen that absorption was already happening. And, you know, our anticipation of the reaction was incorrect. It's anticipation of the feather that we should have had at some point, which came, you know, a little bit late, but still. I think that the original positions that we've opened, all of them were on this big bar. So this is where we are. And I think this is where we are in terms of the price for today, a couple of up bars that we have had. What does this suggest, guys? I mean, like looking at where we are right now. So hold on a second. Yeah, this is where we are. What are we doing here? I mean, like with the position. Our point of entry was on this bar. What are we doing, guys? Are we keeping it? Are we keeping and then scaling out some? Are we exiting completely? All right, tightening our stop. Sell 1/2. Keep and move stop loss up. All right, well, why don't we start again? What's the intention for our trade? I mean, what do we anticipate here? Are we anticipating, let's say, less than a month run into the resistance and then that's it? Is that the trade for us? Or are we waiting for something like at the end of 2018 into, let's say, at least March or May, or even further up, like in June and July, that type of rally? What are we waiting, anticipating here? Should overcome previous resistance and show sign of strength. Yes, so if that's the case, if we are waiting for the price to overcome this resistance and to show some kind of major sign of strength, then why would we be closing the position here? Or even selling half of it? I mean, if our conviction is very strong that this is now, a potential reaccumulation, I mean, we're looking probably at this whole range right here. By the way, look at phase B. This is so great. This is phase B showing a lot of strength. I'd say that we probably are gonna hit the resistance first at 280, gonna overcome and gonna have reaction somewhere here. And I think that we still need to hold on to this, because if this is gonna be an outperformer, then it might actually go up right away, might not even wait for anything. Having said this, I think it would be prudent to take something around this area, like 280, 300. Why? Because we might have a reaction here, and then 300 is kind of like this place where it would attract a lot of the attention to the stock. So a lot of the mean reversion traders are going to short the stock just based on the momentum that's already here. If we're going to have a small reaction like this, what do you think is going to be the next move? Sharon is saying up. Okay, yes. Why? Why would we expect a continuation and, the breakout right here? We are in an uptrend because supply has been observed. Strength of the previous move. Yes, I would take this last one, strength of the previous move. Look at this move. I mean, this is such a strong momentum. What do you think is going to happen when some supply comes in? Demand is still extremely active, extremely strong. So the momentum is going to carry the stock above, this high, which is kind of like the initial attempt to react. So there is no reason to sell on the initial reaction here when it comes, especially if we see that the character of the result is going to be minimal. If the character of the result is expanding, then it would be a concern. For the short-term swing traders, for those of you whose horizon is, let's say, from 2 to 3 days to um, let's say up to 4 weeks type of swing traders, then this is a good way to start scaling out, but probably scaling out on the premise that you want to staircase this trade and your most aggressive stop loss is going to be just below the low of the previous bar. And you would want to close below, not necessarily the price penetration of that low, right? So you want to see the actual close. And then once the price goes to 280 and 300, you want to go into the intraday and time it there. So you want to create that trend and make sure that with the first signs of the reversal, you're getting out. So if this last bar is reversed, let's say tomorrow, then you're out. For the long-term position trader, this is just an icing on the cake. And we're kind of happy that, yes, great selection, great takeoff, but would the price give us another opportunity to get into the position at the lower prices? And it might not give us a big opportunity, so we just have to see. All right, what else here? Oh, another question from Arvin. Looking at the volume, I only can visualize CO's signature from 2005 to 2010. While CO seems absent from 2015 to today. If I look at the volume X price times price, does it tell a different story of the CO activity? And I think that we just went through this in the WTC. I don't know if I actually, talked about it here in the practicum. So I would go even further, Arvind, and I would say that the actual accumulation in Apple has started in 1996, and then it was concluded somewhere here in 2013. So we had a trading range from 1996 to 2003 with the major sign of strength in 98, 99. Then we had a lot of buying in 2001, 2003 trading range. And then we had buying on the way up from 2003 to 2013. It's crazy to think that Apple is that type of stock that has institutional accumulation that happens over a decade. And it's not only in the trading ranges, but it's actually on the way up in the uptrend. But that's the type of the stock that Apple is. Their product line is just so vast and their revenue is so huge that institutions cannot get into this position enough, in just 1 year. As they have more and more resources, they are still accumulating this position because they know that Apple is going to, produce more products. They're going to influence more markets, and we have a lot of those type of companies: Microsoft, Amazon, Walmart, Visa, MasterCard. Those are systematic stocks. If you take those companies away from our society, we're going to feel some kind of some kind of hole is going to be created, because they provide a lot of value to us. So you can't accumulate this position in 1 year. As a money manager, your resources are going to come, in the next 10, 20 years. As new customers are going to come. So you're still going to invest in those secular type of stocks. So their major accumulation has happened during, that period. And then CO is inactive. What does it do? It just holds the supply of this stock in its portfolio, and it does nothing. Why? Well, because the stock is just going up and up and up, and you have to have Apple, you have to have Microsoft, you have to have Walmart, you have to have Amazon, you have to have Google, you have to have Facebook, and so on and so forth. Those type of stocks that are going to have some short-term volatility for sure, but those present, major secular cyclical opportunities for money managers. Again, something that we'll talk a lot, during the December special on the long-term campaigns. So thank you, Arvind. That was a good observation. All right, and a question from Simon here. I found the bias game exercise drills that you did in session 11 webinar incredibly useful, especially when students volunteer to talk through the price action, coupled with the rhetorical questions that you posed during the analysis. Would it be possible at all to do more of these exercises, please, and potentially add where we can take a point of entry and or point of exit? Well, yes, absolutely. So, so we'll do exactly that. Okay, hold on a second. So Dmitry is saying that I've missed out Arvind's main question. Okay, which is this one right here. Any role of for the volume and price? If that's the question, but I mean, we kind of know, right? So without increasing the supply, the price could go up. So that's an ice cream story where supply goes down and the price is moving up. Was that the one, Dmitry? Yeah, well, the CO is an absent and supply is not being presented by the CO. That's why the volume signature is so low. But because that supply is not being presented, the price is still going up. So basically, that's the technicality of that. All right, well, yes, we definitely can do this. So let's do this. Let's do the bias game again. And maybe today we'll go until around 5 or so. But I want to go through this a little bit quicker. So let's try to do as many as we can. I'm gonna give you guys maybe a minute or so. I want you to be thoughtful about this. So let's do 2 minutes, okay? And then just go through this exercise, through this chart, and make as many observations as possible. Go through the left to the right, create this story, and then like in 2 minutes, I'm gonna ask you, what do you think about this bias? And why? Also think about why, right? All right, guys, let's see what you think about this structure. Is this an accumulation or a distribution? Okay, so Dmitry, are you saying that this is a distribution? Just let me know. Okay. Okay, I see. All right. All right. Okay. All right. Last call. Okay. So all of you are saying that this is a distribution. Let's see the answer. And this was a Citigroup in actually very, very interesting time, 2007, 2008. And look at this, huge move to the downside that has happened after that. It's a little bit hard, I think, to see the chart here because we see how the volume signature expands so much. But let's go to the previous chart and let's now talk, now that we know the bias, let's talk about what we're seeing here, maybe something that we've missed. All right, so we are seeing some kind of trading range here prior to the last run. We are seeing some climactic action behind it. The price has a lot of spread increase gaps. There is finally comes some volume signature that we didn't think was homogeneous with the previous volume signature. We even would be suspecting that this is either ETF or this is just a huge large cap stock. Why is that? Well, from the volume signature, we see that the volume does not change too much from day to day. So there is this homogeneous behavior in the volume. It's the same. And only extremes are occurring at the specific spots. And usually that type of volume behavior is going to be associated with either ETFs or large caps. So we're seeing some abnormality in the volume signature, in volume spikes on the way up. And that is suggestive of some supply on the climactic run. We're thinking, okay, maybe this is a buy and climax. Just some small substructure here that is suggestive that the buy and climax has been made. And that we are ready to go down for the potential automatic reaction. Just a combination of how the big structure starts to unfold with an element of the big structure and then a smaller element that is acting as a cause to the automatic reaction effect. And the reason why I'm talking about smaller substructures here is because the structure by itself is too large, too big, for us to think about. We could, this chart is not kind of like very visible, but it's easier to think in terms of the substructures here and then just kind of connect them together. So we're seeing that all of those substructures are small causalities for the moves that follow. So therefore, we're just connecting those moves and we're now kind of like seeing more of the structure that we are supposed to see. And what do we see? We're seeing a little bit of the downsloping structure with the lower high, with the lower low, another lower low here, relative to the previous low or relative to the previous support area right here. We're also seeing how all of the result to the upside, where we had so much excitement, that was negated really quickly on the way down. and the effort has increased to the downside. So definitely some selling that comes after the last speculation. The rally to the upside, again, does not have necessarily, a big increase in the volume signature, smaller result, and has some kind of supply that's coming in into the what becomes the resistance there. Again, to decipher this rally, it's this smaller structure here that would give us the clues. And then I think what comes next becomes extremely important, because we saw a deterioration of the up bars on the automatic reaction right away. All of the profits were gone. Supply has increased. And then we saw the confirmation of that down bias on the way up, on the rally. And we said that the result was mediocre, and there were some elements of the supply. And then it has failed. And as it fails and the institution starts to capitulate this position already, as almost kind of like a late capitulation, not a general capitulation yet, but late capitulation, we see how that volume signature increases. And that produces a lower low, which is a much bigger result relative to the previous reaction. So that confirms the bearish bias and kind of increases also the probability of the continuation, because we see that now that synchronicity is playing out. We're seeing how effort is increasing because volume is increasing, and we're seeing how result is increasing because the distance of the downswing is increasing and the spread is increasing itself. So then the latest structure that we need to decipher is only in the relationship to what has happened prior on the rallies. And we've seen that the more horizontal attempt to rally is going to fail just because there is so much pressure now to the downside. We also could see, from the volume signature, increase in the supply as we have more increase of the result to the downside as well. You could also go and specifically try to identify, the points of the potential reversal, right? Or the points of the supply close to the resistance. We see how there is a really good rally first. Second rally has a little bit more supply behind it. Then third rally on this up bar, we definitely see some supply. Price reacts down right away off the high. Next bar, and we're still reacting to the downside. And then the next bar as well would have that supply signature as well. So there is some selling into this trend, and our tactic here would be very simple. We want to catch the breakout of this apex formation as a confirmation of that trade to the downside. We're thinking that this is LPSY, and we would be expecting some kind of general capitulation that usually should produce acceleration as everyone's gonna capitulate. All right, and that's kind of how it happens right away off the out of the gate, out of apex formation. We see increase in the supply, and then here is that late capitulation by institutions, and then we see in general capitulation again in 2008, where everyone capitulates. All right, questions?